Hello and welcome to another update video about Cardano. So for Cardano, we can continue to be carefully bullish. As I said, from the low here, we moved up in what I believe was a wave 1. We then came down into 2. We are now in this wave 3. That is what we can assume. But within the wave 3, we have a few subwaves, of course, and sorry for that here. And in the wave 3, we can assume that we have done here a wave 1 and a wave 2, and we're now in that wave 3 in yellow, and within that wave 3, we've done another 1, 2. So we are currently in a wave 2 correction. At the moment, it is still very early days in the beginning of an uptrend, so we need to be very careful. I'm only giving the uptrend or the bullish scenario a 60%, but that means still overall that I believe it is more likely than a downtrend. So in the last video we talked about that we'll probably come down once more, which we also did. I mean, we are holding sort of the 55-cent level here, but we have not yet managed to break out of this channel. That's the channel we talked about, which is highly relevant, the corrective price channel. Only when we break out of it, we can be more confident that the overall wave 2 is already in. I specified here a target area for you. Let me just measure that again if that was all correct. Yeah. Here in this wave 2, we would be looking at the area between the 1.618 extension. No, not between the 61.8% retracement, which is this one here, at 53.8 cents, and the 78.6% fib level at 52.2, basically because we've already briefly broken the 50% fib level. I mean, it could be that we're already finding support here. I'd be a bit surprised, but it's possible, of course. The wave 2 has basically done, what it needs to do. It would be good to get one more leg down. That would also work out very well from the Elliott wave count, from a lower level count, and we'll take a look at that in a minute. And then the ideal level would be here between 53.8 and 53.1 cents. This is the larger green area where you would generally expect it to reverse. And then I've got, let's say, a more ideal target in here between these levels, okay? So, and then if we take a look at the overall subwaves here that are unfolding, how can we count this in a wave 2? Well, we can count it possibly here as an ABC. Just taking a look at that ABC here, clear 3-wave move, but actually, and it's maybe when we need to move that box here in this video a little bit. I think it's more likely if we have a 3-wave move like that. This is a wave W, that this here, the connector, is the wave X. And we're now waiting here for another leg down in an A, B, C correction, because a wave Y, W, X, Y, the wave Y itself consists of A, B, C. So here, A, B, C. That would work out quite well, actually. And that means as we move that original wave A, I'm going to take out that 1.618 extension. I'm also going to take out this lower green area. That one remains, but I would have to look at that now. And then we can take a look at different areas now that are likely with this new wave count. So I take the subwaves ABC out because they just confuse maybe. So we still have on here the WXY pattern. I might make that white now. You can see a bit better. And again here, we can then calculate a more likely target for the wave Y. And here again, we take the length of the wave W, we go to the high of the wave X, and that would actually take us to 51.9 cents. That is the next super likely target for a wave Y and the 1-to-1 ratio. So let's actually extend the target range down a little bit to that level. And put a marker here on the chart, just sort of as a reminder. So W equals, and that's the 100%, okay, at 51.9 cents. So that would be an ideal target based on the current wave count. There's another target that we could then use. I mean, if we consider that in the wave Y, we've already seen a wave A, we've seen a B, then we can also calculate here the target for the wave C. So it's just different valid ways of calculating targets. I mean, here we've got the 54 cent level. That's the 1-to-1 ratio. Yeah, normally more likely is the 1.618, and we've got that here at 52.5 cents. So we can add that as well. And that would be the 1.618 extension of wave A. So these are key targets. You've got the larger area here that is based on retracements, fib retracements, and then you've got here this these two levels within that area, which are based on the calculation, the proportionality targets for the wave for the wave Y and for the wave C. Yeah, and these are the key targets. So in summary, I would expect the the price to make another wave C to the downside to complete wave Y. I expect it to reverse anywhere in this region between 51.8 and 53.8 cents, with the highest likelihood targets being either 52.5 or 51.9, and then we would move to the upside. In my opinion, in a wave 3, that can take us all the way up to around, well, here 64 to 66 cents we will need to see when we know exactly how low the wave 2 comes. And then a break out of this channel would indicate and be a confirmation that the wave 2 is already in here. Even if it happens already now, we don't necessarily need to come down that low anymore. It would be good, but we don't need to. And in addition to that, so it's not only the breakout of the channel, an even better indication would be the break above the wave X. Okay. All right, and this is sort of my analysis of ADA here. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.